Good morning, traders. Scott G with the Simple Trading Life here. Friday live stream. Hope everybody has had an awesome week. You've made some great trades, and most importantly, you've come out profitable. So we, as per usual here lately, we're coming at you early in the trading session so we can kind of see how things play out. We'll also do some teaching. And hopefully you can learn a couple of things and become a more consistently profitable trader. So I'm just bringing you guys up right now. Oh, I see we got several people in here already. So good Friday to everyone. And let's get right to it. I need to make some adjustments here. I literally just got out of the shower. I was running behind today. It's kind of funny. I've been up since 4:30 in the morning, but yet was still running behind. I did some stuff for the room, and then my wife needed me to do a few things. And then I went for my daily walked 3 miles today. Just got back about 20 minutes ago, took a quick shower, and then here we are. So I need to get a few things put on our charts. Opening price was at 32.09. So let me find that on here. We always mark opening price level for the session. Man, things a little bit sensitive this morning, but that's okay. Just bear with me and we'll get this put on here. So it was 32.09. I always use a purple dashed line. That way you guys always know that signifies opening price level. So I'll get that put on my chart. Okay, so you can see that so far in this opening candle, which has less than 4 minutes, the majority of the opening range has been below opening price level, which is continuing with this downtrend that we've been on in the recent past. Let me scroll in. Make it easier for you guys to see. So up here was where we kind of topped out on the high at 32.8450. And then we've just been trending down with these little blips along the way. Okay, a little pullback there, down, we based, down, pull back, and we pulled back right into this level here. I'll show you what I'm looking at. So being able to identify structure levels are one of the basics of trading, and it will definitely help you become more profitable. So if you come right along here and then sort of right across like this, those biggest wicks I would sort of ignore, like this one here, but see how these are all sort of about the same size, and you go right across these bodies here. That's where it came down. The bodies show where price closed, then it pulled back right up here into the moving averages, and we made another impulse down. We would call that a push to the downside. Then we rest or exhaust. Some people call it exhaust. Come back up, and now we've been trying to push lower again, and we did make another lower low. Okay, so once you take this out, you've made another lower low. But being able to identify this structure level right across here, okay, once price came below and we made this new lower low below here, where is price likely, right? You never know for sure, but where's price likely to pull back to? If you're going to continue the downtrend, it's likely to pull back into the last level of structure. Look what price did, right into this last level of structure. Then we made another impulse move to the downside. So far, we are continuing this downtrend. Hey, Kelsey, good to see you. Hey, great trade. Kelsey made a fabulous trade on AMD. It was an overnight swing trade, and I believe she closed it this morning. So great job, and obviously didn't hurt that Intel came out with that negative news, which obviously Intel and AMD are competitors, so if one of them has negative news, it's usually going to be positive for the other one. And that was awesome because that really, really was beneficial to your trade. And sometimes being right and having a little bit of good news on your side always helps. Well, you made the right analysis, and it just didn't hurt that the news helped you. So that's a good thing. That's a good thing. So again, here we are. We're less than 15 seconds from the close of this candle. As you can see, we came down. Where did we come down to? Right to our support level, 31.95. We bounced. Looks like we're going to form a hammer here. Now, somebody might say, okay, are we immediately looking to go to the upside? Not necessarily, right? Okay, we got to wait. We got to see if this gets taken out, the high of the hammer. Then what are our obstacles? Our obstacles are the moving averages and then this level of structure. Okay, so even if it takes out the top, you've got to see if it can get through this stuff here. Now that's if it goes up. What is the current trend, right? Well, for a long time, the trend, whoops, I'm sorry, I've got the wrong drawing tool here. Give me 1 second. Okay, for quite a while, the overall, and I'm talking about the overall longer term trend, has been to the downside. Let me put that in there for you. Okay, you see that? Okay, and we're right here at about 40 on our RSI momentum indicator. Anybody who's new, and I see we got a lot of people in here this morning, so welcome to everyone. We use RSI for momentum. Nothing else. We don't use it for anything else. So it's showing us that the momentum is down, and whenever, this is how we use it, if you're below 40, okay, that's strong momentum to the downside. If you're above 60, that's strong momentum to the upside, right? Okay, so that's kind of what we're looking for. So if somebody's looking for a long, okay, they're going to wait until that gets taken out, but then you have to understand you got a bunch of obstacles right above. Kelsey, I'll look at AMD here in a minute, and we'll kind of check that out. So let's finish up on ES here, and then we'll move on. Okay, so then also, if anybody in the room, or excuse me, I should say on the YouTube channel here, let me stretch this back out. If you're an opening range breakout trader, if you use the 30-minute range, now some people use 15, some use 30, some use an hour. But if you use the 30-minute range, here is your opening range, right? You would draw a rectangle around there, and you would be looking for breakouts one way or the other. Now, something that I would, if you're an opening range breakout trader, something I would add to your strategy or rules is look for what would be most likely to be successful, right? So, for example, if you're in a strong downtrend, a break to the downside of the range is probably more likely to be successful. Now, depending on what your target's going to be. Are you going to have a target based on candle structure, on support and resistance, supply and demand, those kind of things? Or are you somebody, we've talked about this before, that tries to just double what the range is? So if the range, I'm just going to make this up, if the range is 12 points, okay, some people who trade opening range breakouts, then they look for a 12-point move. So if they would break out of the bottom or the top, no matter what the structure is, and to me that's it's kind of silly to avoid looking at the structure, but some people don't. I mean, I know some traders, and some of them are actually pretty successful, that totally ignore what's happened in the past. Okay, they don't care. So let's just say this candle gets taken out. That's the break at the top of the opening range. All they're looking for is 12 points because that's some people's strategy on opening range breakouts. And they do play out more than you think they would, right? I mean, they do play out quite often, not all the time. What I prefer to do is, let's just say, let's say that all this stuff isn't here. Okay, we're just generic. and we break out of the top of the range, what I'm going to do then is look for where do I think the next likely place is that price is going to go before it might pause or turn, right? So I know that we've tested here. Well, actually kind of tested there. We bounced here. Okay, now every time that we come back up here and test this, in theory, it should be getting weaker, right? So possibly my target might be like around this level right here. This level right here, which would be the 32.31. But that's if none of this was here, right? We know we're in a strong downtrend right now, okay, on the 30-minute. We know we're in a strong downtrend. So, and we know we have obstacles above. So in my estimation, I'm probably not interested in anything to the upside quite yet. It's not that I wouldn't change my mind, but just giving you my analysis. All right. Kelsey, you're always welcome. Thank you for the kind words. Yep, you can increase anything by putting a bunch of factors together. And we're going to talk about that today. That's actually one of the things I wanted to kind of teach on today. So as we kind of get into the teaching portion of things, I want to show you guys how to identify really high quality trades. If you guys hear some noise in the background, I apologize. My wife and my daughter and her friend are out there and they're just coming back from somewhere. So I can hear them, so I assume you guys can probably hear them, but I apologize. But putting as many factors in play as possible to get you to a successful outcome. So we're gonna teach on that here this morning. And as you can see, price is sort of stalled out right here, kind of between the 32.06 and the opening price level. Right now, it's sort of stalled out. So we'll do this. We'll put an alert above, and then we'll put an alert below, and then we can go look at some other things. Okay, so now we'll be putting an alert there, and then I'm going to add one more right here below. This will tell us if price breaks out of the bottom of the range. Okay, there we go. And I do see we got a bunch of people that are joining us this morning, so welcome everybody. If this is your first time, definitely give us a thumbs up. Smash that like button for us, because that'll help YouTube to recommend us to other people who are searching for the same type of thing. Definitely subscribe to the channel. Turn on your notifications bell. That way you'll know anytime we go live. And if you haven't already, join our community, the simpletradinglife.com. So it's simpletradinglife.com, and click on the free chat room button. Come join us. We talk about the same kind of stuff in there. We watch the market throughout the day. If we see things that are out of the ordinary or things that make sense to us, you know, we're putting that information in the room, and we'd love to have you. We're within a couple members of 400, and we started approximately 6 months ago, and so we're almost up to 400 members now, so we're really excited about that. So join us. All right, now let's go and talk about how do we identify. First of all, let me do this, turn this off. How do we identify good quality trades? Before I do that, Kelsey wanted me to look at AMD, so let's look at AMD, and then we'll move on. Okay, I'm moving over to the TrendSpider platform. I was on Thinkorswim. Okay, so here we are. This is AMD, and let's see, Kelsey, what was your question? Okay, do you think we'll see a retest on AMD of the last structure level? Okay, so that would have been right across here. Right across here. Well, it's going to depend, right? It's going to depend. Now, we know that price is starting to move in an almost 90-degree angle. We talked about this on yesterday's live stream. What does that mean? That means we start to run the risk of exhaustion. Okay, and when something exhausts, okay, like over here, look how strong it moved away. And then what happens is it comes back. This is like an exhaustion right here. And it came back almost to the 10. Then it went back up to the structure level. Then it came all the way down to the 30, then back up, and then it kind of ranged. It went into this range here, right? You see that? Then we J-hooked right here. This is a J-hook. Okay, we J-hooked and went higher. And all that is just what it sounds like. It looks like a J on the chart. It comes down to your moving average there. In this case, that's the 10 EMA. Curls around and it like slingshots off of it. So once we broke through this structure level here, right? Once we broke through here, that was a great long. That was a great long. So that's what I was saying about Kelsey. You did have your analysis correct on AMD. Even though you got a little bit of luck with the news, your analysis was correct. This was a long above here. Okay, and look where it's at. So, great job. I actually entered on the J-hook. Great job. So, will it come back to retest this level? Possibly, right? We don't know. Okay, obviously these are starting to spread. They're moving to the upside. In a lot of cases, it'll exhaust originally back down to around this first moving average. And then it might bounce. See, that's what it did over here. It came down near it. Then it regained some strength. Hit the structure level, then it broke all the way through. And it really came close to this level right here. Okay, I'll draw it in just so you can see it. Now it actually got really close to it. Okay, there you go. All right, you see, well, actually over here it did. I could extend that right across. So you see here where it came up, pivoted, and then went higher. That forms a level of structure across there. That's where it eventually pulled back to, went back up to this structure up here, back down to this structure, back up, back down. So really what happened here is after this move, it went into a range. Okay, it went into a range until it broke through right here. So let me extend this and you'll see. Get it back right there. Okay. You see why being able to identify structure is important. Makes perfect sense if it goes back to wherever new buyers would be likely to come in. Yes, that's correct. That's correct. So we know that until this point right here, we know that this level of structure had sellers at it, right? Because every time it was tested, it sold down. Tested, sold down. Tested, sold down. Tested, right here, this one little candle, sold down. Tested, sold down. Finally broke through right here, and you can see where we're going, right? But if we exhaust, then you're going to start looking at this first moving average because it'll continue to move this direction, and you would look for price to come back to it. And it might be above structure at that point, possibly. Okay. Question. What about tickers that just keep going and going and going? I realize this is definitely an exception. Why would buyers consistently buy at a higher price? Well, they consistently buy at a higher price because they think there's value there, right? Why did Tesla go from the 300s up to over 1,500? And that happened in a matter of months. Why did that happen? Because the traders felt there's value there, especially institutions, right? Because it takes more than retail to make something move like that. So institutions felt that there was value there. Now, along the way, like if we go look at Tesla, let me do this. Okay, let me go look at Tesla for you. I want to show you something. Okay, along the way, now way back here, look at this. This was actually the 200s. Okay, in October, November of last year in the 200s. Now look at the rise, but then look right here. You see this big spike. Okay, and then what happened? Big exhaustion. Big spike, big exhaustion. Okay, in fact, this one came way down, then they regained their footing, and really since here, they've been moving up, but then again along the way, big spike, big exhaustion. Big spike, big exhaustion. Then big climb right up through here, huge exhaustion. Big climb, huge exhaustion, right? So you just got to be careful. Yes, it is definitely ridiculous. Okay, second big spike is what took me out. Yes, yes, well, good, good. I'm glad that you're learning what to watch for, right? So I know a lot of people who trade Tesla a lot, and what most of them do is they wait until they think it's overextended, and then they look to play these big pullbacks. They look to play these big pullbacks because they feel there's a little bit more safety there. But as you can see, this was a meteoric rise, but this goes right back to your original question. Why would it keep going up and up and up like that till it finally exhausts up here? Because buyers felt there was value. They felt there was value all the way up through here until you got right up into here. That's where institutions probably cleared out of the way. And then buyers get trapped up here. People take profits, and you get these huge exhaustions like this. And then over here, same thing, huge exhaustion. Okay? All right. Let me go back to the 30-minute. Okay, that's what we primarily watch, and I primarily trade off of, and I know a lot of people do in our room. Okay, and so we're not even paying attention right now to Tesla. What we're going to do is I'm going to show you how you identify great potential trades. All right, so first, we did this yesterday, so we're going to go through it again. Scanning is just one step. Just because something comes up on your scanner does not mean it's a great trade. So we're going to scan today, then we're going to look at what comes up, and we're going to determine, is it a good high probability trade or not? Okay, so let's add those parameters back in like we did yesterday. All right, so we're on the 30-minute. We want price to be less than, we'll go short first, less than 30-minute. 10, okay, these I have to change. Hang on, because I need the 10. Give me 1 second here. Indicators. Let me change these back to 10. I had it on the mid-range because I was on the daily. 10, 20, and 30. 10, 20, and 30 is for our scalps and short-term day trades. Apply. Okay, and then I'm going to have to actually get out of here, make this the 10. There we go. All right, now we can keep going. So now we want the 30-minute 10 to be less than the 20. These will all be 30 minutes. You can do this on almost any charting platform. I just happen to be on TrendSpider right now. And then 30-minute indicator, 20, less than the 30 indicator, 30-minute. So I'm showing you right how you would set up the scan. And then what I also like to do is add the 30-minute RSI. And I want to see it. You can make it anything you want. I typically go with 40 because that's the bottom. That tells us it's strong momentum. But you could make it 42 or 45 or whatever because that maybe you're going to catch it as it's trending down. But I usually start with 40. Okay, so I'm going to go to my favorites. That's my watch list. I'm going to scan. We're going to see if any of these come up. Well, look at that. We got a lot of them. And it's not surprising, right? Because the market's been trending down the last couple days. All right, so now we can just take any of them. Let's start with Apple. Let's start with Apple. And now we're going to go through and we're going to determine, is Apple in a good trading situation, right? So the first thing, I put out a simplified checklist yesterday. Anybody who's in my room or if you follow me on Twitter, you've got that checklist. The first thing, determine the trend. Are we up, down, or sideways? Okay, what trend are we in? We're down, right? We're down. So what does that tell us? If it's a down trend, we really predominantly want to look for short trades. Okay, so that's number one. The second thing is volume and volatility. Volume and volatility. And I don't know why my volume indicator is not showing up. Maybe I accidentally, yeah, I must have accidentally, let's see here. Okay, so when I do volume, I put the MA length at 50. There we go, now it showed up. So now we can come back over here. All right, so this line, and let me make it darker so you guys can see, and I typically do anyway. You go back down to volume here, MA color, black, and we'll make it a nice thick line. There we go. All right. So this is the second thing on our checklist that we look for. So we know the trend is down, so we're predominantly looking for shorts. Okay, then we want to look at volume and volatility. Okay, so volume, we're down here. This black line is the 50 moving average of volume. So anything above it means it's above average volume because this is the average of the last 50 candles. The last 50 candles. If you're on a 30-minute chart, the last 50 30-minute candles. So if volume is above, right, is above that line, that is above average volume. Okay, so that's important to know. Like, look right here. Obviously, red is selling volume, green is buying volume. So look at this huge candle that we had right here to open the session on Apple. We had a big flush down, then it came back up, formed this hammer, and right now it's right at the top of the hammer. Okay, so that is the next thing that we would look for. All right, when you are in this kind of a situation, okay, we're starting to pull away from the 10 here. What do we need to guard against? Exhaustion, right? Exhaustion to the downside. Look at this candle already. What is it doing? It's taking out the top here. Okay, this could be, if somebody wants to counter trend trade, this could be a good scalp long. Right? Now, that's not what we're talking about right now. That's a totally different strategy, counter trend trading. But if you're looking for high quality short, what you would look for now, because we got so far away from the 10, is a pullback to the 10, because the 10 is going to keep coming down. This might keep coming up, and if it gets near or touches it, right, then we want to look and see where all our other indicators or factors, we should say, at the time. Say, look at Apple right here. Okay, still trending down. We're way down here, 26 on our momentum to the downside. Now that doesn't mean, right, that price won't pull back. It's actually likely to pull back. That's what we're seeing right here in real time. Okay, you guys just watched it take out the top of this hammer that was created on the first candle. But if you're looking for shorts, now what you're looking for is a pullback as the 10 keeps coming down and price maybe keeps moving up this way or even sideways. Once it gets back at or near the 10, then, especially if these are still separated, right, momentum is still down, that would be a great shorting opportunity. Okay. Possibly, Kelsey, right? Possibly. She's asking, will it gap fill? It might, right? It might. We know it's highly likely to get to about the 50% mark. So let's take the low of this, 371.56. The high of this, 365.07. So that's about $6. So $3. So 368, say about 368.10 would be halfway between the gap. You're highly likely to get there. Like if I'm going to scalp something like this, I'm usually trying to get to about the 50% mark of the gap, because a lot of times what will happen is it'll get to the 50% mark of the gap and then turn around. Sometimes it'll fill. Right? Sometimes it'll fill. The bigger the gap, the harder it is to fill. The smaller the gap, the easier it is to fill. Right? So somewhere in that 368.10 range, you know, it might be likely to get there. All right. So let me, I want to show everybody. I'm going to go back to our room. And I want to go, give me 1 second. I'm going to show everybody where we posted that yesterday. And I also posted it on Twitter, but just like a more simplified version. Here we go. All right, so here's the quick checklist, trading checklist. Identify the trend. Okay, what is the relative volume and volatility? We were just showing you, you want it to be above average. You want it to be above average. Okay, overall analysis. What is the bigger picture, right? What's price doing on the monthly, weekly, daily, 1 hour, okay, on those higher time frames? Is there agreement on those time frames? Are they all moving the same direction? Now, I want you to know, you do not have to have every single one of these. You don't. But the more of them, you know, the more that you have, the higher the probability that your trade will be successful. Okay, so are they in agreement? Is price above or below the trend, right? So if you're below, you're only really looking at shorts, unless you're obviously trying to play a counter trend strategy. But we're talking about simple high probability trades right now. So if you're below, you're primarily looking at shorts. If you're above the trend, you're primarily looking at longs. Next step, determine your stops and take profit targets. So is your proposed trade going to offer you at least 2 to 1? In my estimation, you should not take the trade if it offers you less than 2 to 1. I prefer to look for 3 to 1 or greater. That doesn't mean you're always going to get that. Sometimes, though, you'll get even more. Sometimes you'll get less, sometimes you'll get more. But if, and what, here, let me go back and just show you. What I'm talking about is, okay, so right here, all right, this was a trade on Apple yesterday. The break of structure, and then look at everything we had going in our favor. We're going to go right down the checklist. Where was trend? Down. Where was price? Below the trend. Okay. The 3 moving averages. This is our new strategy that we've been teaching to the room. Okay. The 3 equal EMAs. Okay. Are they widening? Were they widening here? Absolutely. Okay. We had identified a level of structure. That was going to be our trigger point. If we could break this level of structure, that's your trigger point. Right? Okay, what was volume doing? Well, let's go down and look. Volume was above average. See this? So we had above average volume. All right, so what's the next thing? Determine your stops and your take profit targets. Well, my stops, I'm pretty consistent. Okay, I talked about it yesterday. I do not like to set big, wide stops. I like tight stops because I would rather get taken out for a small loss and then re-enter if it comes back my way than to have some big stop loss. So what a lot of traders will do, I do not believe in this. If you're going to enter here, they're going to say go up to the last high, the last pivot high. See this right there? That was your last pivot high. And they'll tell you to put your stop just above that. That's a huge stop. That's like a $7 stop. That's, okay, if I'm taking a day trade or a scalp, there's no way I'm doing that, right? Okay, so I keep my stops tight. Okay, now where's your take profit target? My take profit target on this would have been this level of structure right here. Okay, right here, which was this pivot low, and then it went back up. Okay, obviously the trade's already happened. You can see we easily made it there. Okay, so I'm just trying to show you how this works. Did this trade offer at least 2 to 1? Absolutely. Did it offer 3 to 1 or greater? Absolutely. This was about a $6 move, okay, from our entry trigger to our take profit target. It went much lower than that. But this is the safe conservative play. And you can get here and then just start trailing it down if you want to stay in, because look, it never came back even to the 10. Right? So in theory, there's no reason to get out of the trade. You could have just kept trailing your stop below. There's ways of doing that. So what some people will do when they trail their stop, they'll use the high of the last candle. Okay, then this candle they'll use just above here. This candle they'll use just above here. This candle they'll use just above here. That's one way of doing it, right? You could set a trailing stop that just automatically calculates. You want to trade, 25 or 50 cents above price as it's moving down. Okay, you can do it that way. You can just manually move it in increments. That's how I typically do it. All right, but I'm just trying to show you from a trade analysis perspective how you go through a trade like this. Okay, so my stop on this, if this is my target and it's about $6 away, that means I could have about a $2 stop. I'm just telling you, I would not have a $2 stop. Okay, my stop on something like this would probably be 50 cents, right? I mean, that's just me because I like tight stops. So 50 cents, and it was a $6 potential if I was going to have a take profit target right here, right? What is that? That's like 12 to 1, right? And it easily worked out, easily. In fact, it went way past that. All right, so that was number 4. And okay, then you're looking for obstacles. So some people will say, hey, Threep, good to see you, buddy. Threep's in our room at the Simple Trading Live. Awesome, first time on the live stream. I'm glad you're here, buddy. Okay, a lot of people ask, well, where should I be looking for those targets? Well, I put some things here. This is in the room. Your obstacles are going to be things like support and resistance levels, supply and demand zones, levels of structure, trend lines, or moving averages. Okay, those are what you're looking for. So here, this was a level of structure, right? And I already told you, it was a pivot low, okay, a major pivot low. So when we break this level of structure, what is the next major level of structure? Right here, right? That's how you determine them. Or you could have a support level, right? If somebody would have took this support level right here, it easily made that too. But I'm conservative. I'm very conservative. I would much rather know I have a really high probability of hitting this, and I can always get back in. I can always get back in. Okay? So, and then the last thing right here, number 5, execute the trade. Once you've put all that stuff together and it looks like it's a high probability trade, all those factors are in your favor, execute. That means you enter the trade, you put your stops in, you put your targets in, you manage the trade, and you execute. Then, when it's done, you analyze the success or failure of the trade. What can you learn from that trade that will help you be better the next time, right? Okay, I'm just making something up here, right? So maybe if this was your take profit target, this level of structure, maybe when you hit it, and then you see it just continue to go down, when you analyze it, maybe that's what your takeaway was. Maybe instead of just exiting, when I hit my target, I should have trailed it from that point on. Okay? Or, again, I'm just totally making something up. This was obviously a very successful trade. Let's just say that you broke this level of structure and then price reversed and came back up. And maybe you analyze it and you look over here and you say, oh, well, really, I should have waited until I got below this wick right here. Even though I identified this as a level of structure, I never cleared that wick. Maybe my entry point should have been below this wick. Now, obviously, that's not what happened, but I'm just saying that's the way you analyze a trade. Okay, so then the next time, if that would have been what happened and price reversed on you there, and you see a similar setup in the future, you're going to say, oh, okay, even though this is really my level of structure here, I got this kind of outlier wick over here, I have to take that into account. All right, so I hope that makes sense. Okay, Kelsey says, what are your thoughts on a counter trend trade on Intel to 55? Well, let's look at Intel. I'll go over and take a peek at it. Okay, so let's expand the screen. All right, so where we are at currently on Intel, we had this huge drop because they had negative news, right? So one of the reasons swinging can be, right, can be dangerous is what if you, there wouldn't have been any reason in my estimation, but what if you were long on Intel and then they put out news that they're behind on their latest chips? And then this happens. There's no avoiding that, right? There's no avoiding that. All right, so Kelsey, you're asking, you know, what do I think about maybe a 50% retracement on this? I'm not interested in it. I know you're maybe looking at it, but I guess if somebody was interested in that, you'd want to see it take out the top of this candle first. Okay, determine what 50% is between these two, the low of this and the high of this. Okay, and then also you got to remember the 10 is going to keep moving down, right? So if the 10 gets past where the 50% mark is, even if it takes this out, it might only retrace to the 10 and then continue lower. So you just got to understand that. When you get these big, huge gaps like this, see how quickly the moving averages are turning and starting to head down? So the only way I'd be interested is if you took the top of this out, and then my target would probably be, and again, this is not a trade I'm interested in, my target would probably be catching back up with the 10, this blue line right here. Okay? All right, so now let's go back to identifying good trades. All right, so let's go. We looked at Apple. Let's look at, I'm just going to pick some things out at random here. We looked at CGC yesterday, so let's look at something else today. How about Baidu? I don't think we looked at Baidu yesterday. Okay, Baidu is one of the Chinese stocks. Baba and Baidu are the two that I pay attention to. All right, so if we're looking for a potential trade on Baidu, let's go back through the checklist. First thing, what's our trend? Well, the easy thing, right, is you just take whatever the highest point on your screen is down to where your current price is. You could draw a line, but you don't have to. The trend is down, right? So the trend is down. Is price below the trend? Yes, it is. Okay, is price below the trend? Where is the volume right now? Volume is way above average. Okay, volume is way above average. So that's another factor. Now, let's start looking where are we at currently. Well, we had a huge gap down. What is price currently doing? It's pulling back, right? You could almost say, and I know traders who do this. Actually, I know a former institutional trader that he always acts as if a gap is just a huge red candle or a huge green candle. So in his mind, this is red all the way down. It's a huge red candle is what he says in his mind. Okay, now you could do, right? You could do the 50%. Now that would have been from where it opened. Okay, from the low of this to where this opened, that'd be your gap. You could do 50%, and that could be a target on a counter trend trade. Okay, if that's what you're into. It's not really what we're talking about today, but if somebody's looking for a counter trend trade. But the 10 will keep moving down. If price gets back to the 10, and we still look at momentum, okay, what's momentum doing? It's still to the downside, right? It's actually below 40. Now we have to look. Okay, well, now we got to squeeze it in. All right, let's look across here. All right, it'd be right in here. And oh, look at that. Amazing. You guys see, can you see the dotted line across from where my cursor is? Here's our next level of structure, and look where price stopped and bounced. You see that? Right there. Right there, straight across. Okay, so we've already got to where that next level of structure was, and price is bouncing. So if I expand this again, okay, the bottom of this wick, if you go all the way back across to that next level of structure, that's right where this bounced. So I'm really not interested until price gets back to either 50% of the gap or back to the 10. And then if all these other conditions were still the same, these are wide, trend is still down, volume is still above average, all those kind of things, momentum's still down overall, I would be looking for a short then off of the 10. There's where a high probability trade would be. And where would your target be? I'm just going to make something up because remember, this is going to keep moving down. This might keep moving up. So let's say they meet right about here. Let's say they meet right about here, and then you get some trigger. You still want a trigger to get you back in. And there could be various ones, right? It could be a shooting star. It could be a doji after that move back up to the 10. It could be a bearish engulfing. So maybe these get smaller and smaller. They touch the 10 and the next candle is a bearish engulfing candle. That could be your trigger. Okay, just giving you hypotheticals. So then my stop would be slightly above that and my take profit target would be down here around the bottom of this wick. So that's about 116.60. And again, this is going to keep moving down. This might keep moving up. So let's say the entry's over here, 118.89. So that'd be a $2 move. That's a good move on Baidu. That'd be a $2 take profit. And where would my stop go? For me, on a stock of $120 stock, again, 35, 40 cents, maybe 50 at the most, and I could get a couple of bucks. That's 4 to 1. So does that all fit into the parameters of taking a high probability trade? Yes. Yes. Okay. Ekawande, good to see you. Yes, and that's what we're teaching today. We're trying to teach the checklist on how you identify high quality trades. So what he's talking about is this checklist from over here in the room, okay, right there. Again, start with trend, then look at volume and volatility, your overall analysis, what's the bigger picture, are you above or below the trend? Determine your stops and take profit targets. Are they going to give you at least 2 to 1? At least, preferably 3 to 1 or greater. Okay, where are your obstacles? And then you execute your trade and then you analyze your trade. Okay, it's that simple. All right, so we just looked at Baidu. We can look at some others down through here. And because the market's trending down, that's why we have so many that showed up on the scan. Remember yesterday when we did a couple of the scans, we were only getting like 4 or 6 names. Right? Now we're in this steady downtrend, and this scan right here was for shorts, and look how many we're getting that fit that criteria. But again, not every single one of these will be a great trading opportunity. All right, let's look at Netflix. That's a popular one. Let it load. There we go. Okay, so here we are in Netflix. Let's just go through the checklist again, right? Let's go through the checklist. What is our overall trend? Easy. It's down. Okay. What's our volume? We're above average, right? It's above average. It's above that 50 period moving average, which anything above that means that you've got above average volume, right? 50 periods, 50 candles. If you're on a daily, it'd be 50 days. That's a pretty long time to go back. That's really smoothing everything out. So when you get volume, especially like over here, way above it, okay, that's above average volume. All right, so we do have above average volume. However, is price below the trend? No, it's not. Not right now, right? We would want it to be below the 10. Okay, it's back to it. It's actually above it. Okay, these are still widening though, although you see how the 10 is curling a little bit. Okay, but you see what we're doing. We're looking at the different factors here. Look at this big green candle back. So that means it gapped down and immediately shot right back up. That tells us, and let's go back and look. Maybe we can see something over here. Okay, let me put my cursor there. Okay, there I can see it. Hang on one second, I'll show you. All right, you see if you follow my cursor across, there's a level of structure right here. Right here. And that's what it gapped down into. You see that? It gapped right down to a level of structure. We came up, we formed this double top right here, and then it sold off. That formed a level of structure right here. We did go through it, right? But levels of structure can be broken. And then the next time you get to it, look at this, right? So it broke here. What's the old adage? Resistance becomes support, support becomes resistance. So this was resistance, this level. It broke through, which means the next time you get to it, it should be what? Should be support, and it was. Okay, put the cursor, and look, it went right to it. Right to it. All right? So now, what we would be looking for, oh, and we're getting, look at these, we're getting bottoming tails as well. We're getting bottoming tails as well. So right now, if I was looking at Netflix, I wouldn't be super excited about going short right now. I just don't, you know, again, we're trying to find the best trades. Not just any trade, not just something that meets one criteria. Oh, the trend is down. Okay, that's only one thing, right? So I am not super excited about a short right here. Hopefully you guys can see why. All right, let's go back. Let's look at another name. So I'm glad we came across one that wasn't, you know, something that we would say is a great short. Let's look at Beyond. I'm trying to look at some of these that are fairly popular. Okay, so Beyond, gap down. We had a lot of gap downs today. Okay, Beyond gap down. So what is our trend? Well, look at this. It was flat. It is starting to turn down. So we may be catching the early part of a trend. We may be. Let's look at the overall picture here. Okay, so see what we did? We went up. We went flat, consolidation. We downtrended. You see this? Okay, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Then higher high, higher low, higher high. And then we just started chopping through here. Now it looks like we may start to turn down again. All right, let's go back even more. Give me 1 second here. All right. You always have to look at the bigger picture. Look where it stopped. Okay, here is your last, okay, that has not been broken, your last level of structure that hasn't been broken, and look where it bounced. You see this? Come right across. See that there? This is all you got to do. This is how easy it is. Okay, so we know these two pivot lows here and here, that's a level of structure, and that's right where price bounced. So let's get back over here. All right, price is below the 10, so we're below the trend. Volume is up, okay, but it has started to decrease, right? See how it was up here? It started to decrease. We have our gap. So we would also be looking, if it takes out the top of this hammer here, okay, then you're looking for it to either get to the 50% level or back to the 10. That is where your selling opportunity would come into play. That is where your selling opportunity would come into play. Momentum is down. We're actually below 40 and trending down, momentum. Okay, which that couples together with the widening of our equal EMAs to the downside. We're just putting it all together. But I would be interested in this and Beyond once it pulled back, either back to the 10 or about 50% of the gap. All right? Okay, we'll look at a couple more. Crowd, ATVI. Let's look at ATVI. I know a lot of people like to trade this. This is Activision Blizzard. They're a gaming company, if I remember right. Okay, we're going to go through it again. Repetition, right? Repetition's how we learn. What is the trend? What is the trend? We can even scroll in. Okay, so we had here, we had a contracting range. Go back and look at past price action. It'll help you determine when things start to happen. You can anticipate in the future. See this contracting range here? And then what did we do? We broke out and went higher, so we trended up. Okay, now we went rally, base, drop. Rally, base, drop. Should we ever get back up here, this would probably be a very stiff level of resistance. Okay, so now let's scroll back in. I wanted to get a look at the bigger picture there. Okay, is price below the trend? Yes, so we're trending down. Price is below. Are our 3 moving averages widening? Yes, they are. Do we have above average volume? Yes, we do. Okay, we're currently pulling back. We had a small, well, actually, yeah, we had a small gap down. We had a small gap down. Price is pulling back currently, and we're going to see, right? We're going to see, does it get all the way back to the 10 or near it? And then what we would look for, move down, lower low, some form of a lower high up in here, and then when we get a trigger, if everything else is still the way that we want it to be, trending down, price below the trend, above average volume. Now, sometimes you won't get above average volume if it's in the middle of the day, but at the beginning of the day and sometimes the end of the day, you're going to typically get it. Those are usually the best times to trade. Then, right, we know that the bottom of this wick would probably be our price target because structure, level of structure, is what caused this to bounce. So let's say 78.25. All right, so let's just say this keeps moving this way and this keeps moving this way, and we make contact right around 79.75. And what do we say this was down here? 78.25. That'd give you about a $1.50 target. If you had a 50-cent stop, that gives you 3-to-1 risk to reward. So if all that happens, you just execute the trade, you put your stop on, your take profit target on, and you let it play out. You manage the trade. You can move your stop. If price starts to go in your direction, get yourself into break even or slight profitability as quickly as possible. That way, if price reverses, you can't lose, right? You'll just make a little bit of money, and then you let the trade play out. That's how easy this is. Okay, let's go back and look at ES real quick. Okay, so here's ES. I just wanted to see, it kind of whips on a little bit. We made a move down, and now it's pushed back, and look where it's catching resistance. Look where it caught resistance here, right in the moving averages. Remember why I said I wasn't super excited about a long yet? Because of the obstacles, because of these obstacles right up here. And we have a level of structure right above that so far we haven't been able to get through the last couple times. So right now we're getting a lot of whipsaw. And we have not been able to get through these moving averages yet. So I just wanted to take a quick look at that. Both of our, no, I take that back. Let's look here. No, yeah, only one of our alerts went off. That was to the upside. But still, the first time it hit this must have really shot down and then it came back. So it's making another attempt to get up through there. All right, so let's go back over to Trend Spider. We'll see if there's anything else we want to look at. How about NVDA? That's another popular one. I haven't looked at any of these charts. I just did the scan with you guys. So, all right. So NVDA, look at this, right? Look at how strong it came back from this gap down. So the first thing we want to do, what is trend? Okay. Currently trending down, currently, okay, but we're also seeing this strong move. What's the volume? Well, it's above average, but it's above average to the buy side. This is buying volume. That's why those candles are green. Okay, it is shooting back up right now. All right, let's identify. Oh, look at this. Look where it bounced. See these big wicks right here? Come over here. That's right where it bounced. I mean, literally, you guys, you just see it, right? every time we do these live streams, like people will just try to tell you over and over that like this doesn't matter or that doesn't matter. Just stick to the basics. It will make your life so much easier. Okay, so look at this big pivot right here with these big wicks. And look, right, price gap down. It shot down into these wicks, caught a bounce, and look at that bounce. So what does that tell us? What does that tell us about this level right here, right through here? It tells us there's a lot, I mean a lot of aggressive buyers right there. A lot of aggressive buyers. Now, at this time, the overall trend is still down. The overall trend is still down, okay? If we drew a trend line across the tops here, okay, but it's getting back up there. Price is now back up into the moving averages, right? It's back up into the moving averages. I personally, looking at this, I'm not interested in any kind of a short right now. Nothing. Nothing. Okay, so even though some of these factors are in our favor, not enough of them to take a short. And I'm really not interested in a long either. Why? Because we've had these 3 big green candles to the upside. At some point, we'll probably see some sort of a pullback, but it could be just a little bit of profit taking and then another move higher, right? Because we know, again, if I scroll back out, we know that right here, okay, that's why we had such big wicks in the first place. Buyers came in. Look at the momentum to the downside over here. Look at this momentum, and then look at that wick, and look at this wick. Sellers just stopped them cold in their tracks. Excuse me, buyers. Buyers stopped the sellers cold in their tracks right here and just push price right back up. And then over here, they've done it again. So that tells us that if price should return back down to this level at some point in the near future, be careful, right? Have a take profit target that's really conservative and don't get too deep into these wicks, or else you may see some huge bounce go against you. All right. You guys, should we reverse it? Should we see, even though we know the market is down, should we reverse our scan and see, is there anything going up against the market today? Why don't we do that? So let's say, I think it makes me start all over, and that's fine. It doesn't matter. Yeah, it'll make me start all over, and that's okay. So you guys bear with me. I'll put in a long scan. It'll just take a minute. Okay, so we want 30-minute price. And you can do anything, right? If you like to trade the 15-minute, do your scan on the 15-minute. All right, so we want price. We want to be the close to be greater than our 30-minute 10. And we want the 10. We want the 10 to be greater than the 20. And these are all 30-minute. And on TrendSpider, when you do a scan, you can have multiple time frame analysis. You could say you want the 30 to be greater than the hour, or oh, I'm just making stuff up, or you want the 5-minute to be greater than the 15, or however you want to do it. Okay, and then we need the 20 to be greater than the 30. So what we're going to do is we're going to put a scan in now to see if we have anything going against the grain, so to speak. Indicator 30. All right, and then our final thing will be our RSI momentum indicator, and this time we want indicator RSI, and we're looking for greater than 60. All right, so let's do the scan. 1. So on my list of 30-35, AMD is the only one going against the grain. Okay, that's the first one we covered today, so we're not going to spend much time on it right now. All right, so it's the only one going against the grain. Trend is starting to move up. Okay. Do we have above average volume? Yes, we do. Is momentum up? Yes, it is. Right? Now, I believe AMD is at like either all-time highs or, you know, definitely highs for recent history, if not all time. Okay, so it could continue to go up, right? It could. Not forever. Looks like we might have a little bit of a 3-candle pattern play trying to form. So, you know, maybe it could get up into here. Now, I'm not necessarily interested in this as a long play right now because of this huge gap. And I want to be careful. It's getting real far away from the 10, right? So I just want to be careful that all of a sudden it doesn't turn around and exhaust. Okay, and I think Kelsey did the right thing by exiting. She was playing it overnight, and she'd already said, and she stuck to her rules. That's important. That's how you become a great trader. We're going to talk about something in 1 second here. That's how you become a great trader. Win or lose, stick to your rules every single time. Because if you vacillate, they're not rules. Right? If you adjust and, okay, well, I think it's going to do this or I think it's going to do that, so I'm going to adjust my stop. Or I'm going to make my take profit target longer because, you know what? Hey, the market's strong today. It's probably going to blow through that first obstacle. And you know what? Maybe it does. Maybe it does. But 3 times out of 4, it's probably going to get to that obstacle in reverse. You moved your take profit target, and now you went from profitability to break even, or worse yet, losing money. So getting back to what she did today, in her mind, she said, she was saying it yesterday, if I'm up in the morning, I'm closing my trade and I'm locking in profit. And she did it. That's exactly what she should have done, right? That's exactly what and she made great money too. Okay, so especially percentage-wise. All right, so AMD is the only one on my list going against the grain. Let me check. I'll do the whole S&P 500. Let's do the whole S&P 500. Here it is. And let's see how many in the S&P 500 are going against the grain. Okay, more than you would think, right? Look at that. Quite a few. Quite a few are going against the grain. So here's Caterpillar. Let's just look at Caterpillar. All right, let's go through our list very quickly here. Okay, what is the trend? Well, right now, there really isn't one. Okay, I want you guys to understand that. It is starting to turn up, and they look like they're starting to widen, but look right across through here, right? It's just basically been chopping up and down, chopping up and down. Up, even though it did kind of break through here, right? It's already turned back down like it's coming back down. So right off the bat, the first thing, we don't really have a discernible trend. Number 2, what's the volume doing? Come down here, we're actually below average. We're below average, so that's 2 strikes against us. That's enough for me. I'm already moving on to the next thing. Okay? That's how easy it is, right? So I don't want anything to do with this trade. So you move on. You go to the next thing. Let's look down through here. Halliburton. Let's look at Halliburton, and it's a lower priced stock. Okay, what is our trend on Halliburton? It's very easy to see, right? Our trend is up. Our trend is up. Is price above our trend? Yes. Are the moving averages, and that's if you're employing this strategy, our equal moving average strategy, are they widening? Yes. Is volume above average? Yes. Okay, check mark, check mark, check mark. All right, bigger picture, what are we looking at? Now, I'm not taking the time right now because it would take forever if we did it on every single name, but you should be looking at a minimum of the weekly, the daily, and the hourly. Okay, a minimum. Okay, monthly, weekly, daily, hourly is even better. You know, if you have a platform that allows you to have 4 screens, or yeah, 4 windows on your screen, you can just have them, right? You could have a little module that has your weekly, your monthly, your weekly, your daily, your 1 hour. And very quickly, you put a name in, you have them all linked together, and it brings up a name like Halliburton. And I'm not going to do this, but okay, am I up on the monthly? Yes. Am I up on the weekly? Yes. Am I up on the daily? Yes. Am I up on the hourly? Yes. That means that if you're looking to go long on the 30-minute, really anything below there, your chances of success have increased exponentially. Now, you're not always going to have complete time frame agreement, or some people call it confluence. So the question always comes up, well, if there is some conflict, is what they call it, what's the most important? The most important thing, if you're day trading or scalping, is the recent. So the hourly and the daily would be more important than the weekly and the monthly. If you're swing trading, the monthly and the weekly are going to be more important, right? You want to know that overall longer trend. Okay, so just keep that in mind. So right now we've got a lot of things in our favor here on Halliburton. However, let's take a bigger picture look at the 30. All right, we know where we're at. Here's current price. Okay, and we come back over here. It's at the bottom. You see this? So we had sort of like a double top over here, and this is the bottom of the V. That's the structure level. Look across now. Look back and forth. That's the structure level that price is having a hard time getting through. The bottom of this V right here. You see it? You see it? And over here. Okay, and then it came right here. And now that's what we're having problems getting through. All right. Does that mean that we don't take a trade? Not necessarily, but we're going to look at some things here. Give me 1 second. Let me stretch this and pull this over. Okay. So we know right now, you could draw a line right across there, or even a little rectangular box if you want to include the wicks. We know that so far, price has not been able to get through this structure level. However, what are we forming? What are we forming right here? Okay, I call it a slow curve. Some people call it a cup, right? Now, if we're going to form a cup and handle, what will happen? We're going to come up, we're going to reject, we did. Price will then come back to the moving averages. It'll curl around and it will J hook up. So what you would be looking for on Halliburton, right, is for price to come back to the moving averages. It could be the 10, it could be the 20, back in here, curl around, and then when it makes that next attempt, if it would break right here, okay, the tops of these two wicks, that would be a high probability long. High probability. Trend is up. Volume has been up. Momentum is up. Okay, you can come back over here and you got to look for a target, right? All right, so where would our target be? It would probably be right up about the top of these candles right here, just below the top. So around 15.15. We'll just use that as a generic number, 15.15. So obviously Halliburton, right, only being a $14 stock or so, if you get that kind of a move, it's going to pay you some decent money. So you wait till it comes back down, J hooks around, you take this out, that would be your entry point, and then your target would be 15.15. Now, that's not very much, right? But this is a stock that doesn't move very much. Okay? So it's all relative, right? There's stocks that are $400 and they might move $20, $30, $40 a day. Okay? This $14 stock, it might move 75 cents a day or 50 cents a day. And you know how you can look that up, average true range. Okay, I'm not going to spend the time to go do that now. We can do a lesson on that at another time. Average true range tells you what something moves. And that's up and down range. All right, so let's look. I think that's Under Armour. Trying to see what else is in here. What is COG? Cabot Oil. These are all names that are coming up on our long scan. Here's Target. Let's look at Target. I was looking for names that like people would know. All right, so here's Target. Okay, let's determine where are we at? What's the trend? Okay, let's come back in. Trend is obviously to the upside. From here, here's our last pivot low that has not been broken. Up to here, trend is obviously up. Above average volume. Okay, now we're starting to get in that time of day where volume is going to drop. But up until now, it's been above average volume. Is price above the trend? Yes. Right? Yes. Now, what would concern us here? What would concern us here? Exhaustion, right? Strong move up. Strong move up. So now we have to guard against exhaustion. So what we would be looking for, we got a lot of things that go in our favor for a potential long, but I would again be looking for a pullback back into the moving averages. Once it pulls back, right? So let's look at the moves up. As it came up, pulls back, comes up, pulls back. Look where it pulls back to. Moving average. Went up, pulled back. Where does it pull back to? The moving averages. Up, back. It's going up again. It's probably going to pull back at some point back into the moving averages. That is where you would look for your long, right? I personally wouldn't be interested right here because you'd be getting in later in the move. You would be getting in later in the move. Let's look at the bigger picture real quick. Let's get a little bit more data on our screen. All right, let's come over here. And look at that. Right here, these are the bodies. The very top, this is actually a double top. It's just smushed together. See the V? So that was a double top. And look across the screen. Look where my cursor is. That's right where price has hit and stalled. So now I would really be concerned about any long. Okay, that's why you want to look at the bigger picture. You want to know where you're at. I would be really concerned about trying to go long right now. Doesn't mean that you can't, but this is the first time price since this was formed, this double top. And here, let me drag it across because I'll show you. Let's stretch it out. It's kind of hard to do. And I'm still getting used to using TrendSpider. I love it though. I do love it. All right. At least this is making it easier for you to see. All right. There it is. Okay. See the double top? See the double top? And right, if you drew a line right across the top of these bodies, that is exactly where price, get back over to it, has stalled out. Come on. There we go. See that? That's exactly where price is stalled out. Right at the top of these bodies of this double top. So that's why knowing your surroundings is important. All right, so where could a potential good trade be? Well, if we get a pullback back down into the moving averages and then a trigger to go long, looks like, you know, maybe somewhere down here around 123.90 would be about where they would start to meet up. And if you got a trigger to go long, your target would be around 125.25. Okay, so what did I say, 123.90? So that's about a $1.35 move. $1.35 move. That's a pretty good move on target. That's how you determine your trades. Okay, Rohan says, please check UAA. Let's do it. Let's check it out. It's on our list too, so there it is. Bring up Under Armour on our screen. Let's check it out. We'll go through it. All right. You guys know the drill. Okay, what is trend? What is our trend? We can even scroll back a little bit. Obviously, okay, coming way back to here, our trend is up. Trend is up. Is price above trend? Yes, it is. Is volume up? Yes, it is. Again, kind of ignore this because now we're starting to get into the dead zone. Volume is every day. Volume is going to decrease in the middle of the day, and then it's going to come back up at the end of the day. Okay, but we are above average on volume, right? Trending up. Are the moving averages widening? Yes, they are. Okay. Now, okay, let's look at momentum. Okay, for a while now, overall momentum is up. Are we above 60? Yes, we are, which has strong momentum. So now we did just bounce off of the 20, and we sort of broke through right here. You see that? See that right there? And it looks like it came back to sort of retest it. Let me see where we're at on the candle. We've got, oh, we got about 16 minutes to go on the candle. So a couple different ways to play this. Let's look for a potential target first. Let's see, is there a target that would make sense? So if I look over here, this is a good sign. See this over here? We are not in an area that we should be seeing resistance. We shouldn't see resistance until up here, around 1140. Okay, so between 1140 and 1150 is where we should probably run into some resistance. Now again, this is a cheaper stock, right? It's only $11 stock. So a couple of ways you could play this. Let's just say this candle ends as a spinning top. So we'd have a decent sized green candle that broke through some structure right here, closed above it. We get another close above it that could potentially be a resting candle. Then if your next candle goes green and takes the top of this out, you could take it, right here at 1117, 1118, and then a target of somewhere between 1140 to 1150. Okay, that would be a higher probability trade, right? Because all the factors that we looked at, trend is up, price is above trend, above average volume, the moving averages are widening. We don't have anything like a chaotic candle, anything like that. This is just a good size. If you look, we've had some of these, right? Some decent sized green candles. Look right here. This is what could happen. See this candle? Decent sized green candle, resting candle, boom. Okay, we shot up. These two candles are about the same magnitude as this. So if you read through our rules in our lessons channel on, it's either in the regular lessons or the premium lessons, but they're all free. A 3-candle pattern play can be 4 candles, can be multiple candles because they combine. If you put if you put both of these candles together, it would form one candle about like that. Okay? And you can have 2 resting candles, but not more than that. 1 or 2 at the most. So we had the strong move, 2 resting candles, and then we blasted back up. That could potentially happen over here. Decent sized green candle, we may rest. Okay, and then if you take the top of this out, you could try to go long. I'd probably put my stop just under here. Keep your stop tight. So that would give you about a 10 or 11 cent stop for the potential of a 30 to 40 cent gain. Right? So about 3 to 1. About 3 to 1. Okay, so that is Under Armour. You see how everything's all relative. This is just a smaller price stock. So the moves are much smaller, but you're still looking for the probabilities and you still want to be conservative. All right. Let me see. There was something I wanted to cover and it just slipped my mind when we started to look at Under Armour there. Let me think. Oh, I know what I wanted to cover. So, and we can look at something else off the list too while I'm talking about this. Let me see if I can find anything else. What is NBL? Oh, that's an energy company. That was Target. AMD we already looked at. And then we're down here at the bottom. What's EXPD? Expeditors International. We'll just bring it up. So anyway, I talked about this a little bit in our room today. Again, if you have not joined our room, please do so. It's completely free. Go to simpletradinglife.com and just click on the free chat room button. It'll bring you right in. And you can follow me on Twitter at FreeTradingHelp. At FreeTradingHelp is my handle on Twitter. I was talking about this a little bit in the room today. We, in our community, we try to keep everything simple and basic to help you easily understand it, easily identify high probability trades, and then all you got to do is execute on them and just follow your rules and have strict risk management, and you just do it over and over again. And so what I brought up this morning, I do know some former institutional traders, a few of them. They're all actually retired. They all retired young because they had made so much money. They did very, very well. I know some prop desk traders, proprietary trading firms, and what they do is they hire traders to trade their money for them, right? Because one person can only trade so much money, right? So these prop desks, they hire traders to trade other people's money, including the firms. And the firm may have people that put money in and then they expect a return on their money. Well, how they determine who they're going to hire. A lot of these institutions that are hiring institutional traders or prop desks that are hiring traders to trade other people's money, the two things that they're concerned about the most over everything else is, do these traders have a systematic mechanical strategy or strategies? They don't care if they have more than one, but are they systematic and mechanical? Okay, if this, then this, right? If this happens, then I'm going to do this. If this doesn't happen, I'm not going to do anything. And they'll have a list of rules, okay? And that's how they trade. That's number one. And then number two, do they adhere to strict risk management? Do they adhere to strict risk management? So a lot of these firms, what they'll do is they'll go through the interviewing process. And I don't know if you know, but like especially now, it's ridiculous. It's always been crazy. But right now, like everybody wants to get into trading. So a lot of these prop desks, these prop firms, they literally get hundreds and thousands of applications all the time. So they'll weed through them through some interviews, and then they'll get a group of traders that they like through the interviews. And then the final step will be they give them so much money, and it's a simulated account, but let's just say they give them $100,000, and they'll say, okay, over the next 2 weeks, here are the parameters that we want you to follow. Over the next 2 weeks, we want you to grow this $100,000 into as much money as you can, staying in these certain parameters. Well, the parameters will typically be something pretty general, like you can never risk more than 2% of your account on any given trade. All right, so 2% of $100,000 is $2,000. So that's $2,000 risk. That's where your stop would be, right? It's not the overall amount of the trade. But then the next parameter will be, what is the max percentage of your account that you can have in play at any given time? And that might be 20% or 25%. That's a typical number that they would use, 20 to 25%. And that's it. Those are the parameters they give them, and then they just sit back and they watch them for the next 2 weeks. So in theory, most people think, okay, what's going to happen is whoever makes the most money, the traders that make the most money, that's who they're going to hire. That is not even close to what they do. That's not even close. So the first thing they do is they watch everybody, and anybody who violates the risk management rules in any way is automatically eliminated. So what will happen is they give them these parameters, but the system isn't going to force them to do it. So if they say that you cannot risk more than 2% on any given trade, and you have $100,000, right? And you can only use, let's just keep the math easy, you can only use a maximum of 20% of the account in play at any given time. All right, so one guy, this will be the smart guy, he'll take that $5,000, excuse me, that $20,000, and he'll divide it by 4, meaning he could have 4 trades that he has $5,000 in, and he could risk $2,000 on each one of those trades. Okay? As long as he's at 100,000, and that's going to change as his account grows or shrinks. So that's a smart guy, and he will not go over it. Okay, some of these other guys, though, they'll put on 4%, 5% risk, meaning where their stop is. And instead of, if their rule was they can't have any more than 20, greater than 20,000, 20% of their overall account involved in trades at any given time, well, they'll be at 25% or 40% or 50%. All of those guys, now they don't stop them right then, but they just check them right off the list. They're immediately eliminated. At the end, at the very end of everything, of the 2 weeks or however long they do this for, they'll tell all those guys, okay, John, you're out. Okay, you risk too much. Bob, you're out. You risk too much. Sally, you're out. You used more than the max percentage of your account. All those people are immediately eliminated. Then the group that's left, they start to look at how they traded. Did they have a systematic, mechanical approach, or were they just winging it? Okay, did they not really follow any set of rules or strategies? They get rid of those people. Then whoever's left, and it's usually a pretty small group, whoever in that group of traders that made the most money, those people are who they bring on. So a lot of the people they get rid of will have actually made more money. They may, I'm just totally making numbers up, but they may have turned that $100,000 into $500,000. The group that's left who followed the strict risk management and followed systematic mechanical strategies, maybe they only made 300 grand, 250, whatever. They would much rather have those traders because they know without a shadow of a doubt that over time, those traders are going to make more money than the other traders. The other traders gamble too much and they have no systematic mechanical system. They might make 500 grand over this 2 weeks, and a month from now they've blown up, and that's not even their money. That's the firm's money. Okay? The reason I tell this story is we want to trade like big money trades, right? Those are who they're looking for. Those are the types of traders they're looking for. I actually know a friend of mine right now who's a big money trader on his own. He's actually thinking about trying to go to work for a prop desk. He's actually approached one. He's had some talks with them. There's some interest on both sides. And basically, that's exactly what they're telling him. If you make it down to this final cut, you're still not in, then you have to prove to us that you can trade our money with very strict risk management and with a proven mechanical systematic system that you can repeat over and over and over again. And he said just going through the process with them has made him a better individual trader on his own because he was one of those guys that would adjust his rules. Well, the market's really doing well this week. So I'm going to make my stops bigger. I'm going to make my take profits bigger, so on and so forth. Or if he thinks that like the market's not, the market's in a real tight range or whatever, well, this week I'm going to do it this way. Next week I'm going to do it that way, and so on and so forth. And that's not what they're looking for. They're looking for consistency. So anyway, Rohan, you're welcome on Under Armour. Okay, let's take a look at this. Then we'll go back and look at ES one last time, and we'll jump off of here. All right, so I don't trade this ever. I just brought it up because it was on our list. Expeditors International. What is our trend? Well, let's look. It's currently trending up, right? Okay, but it has been sort of ranging here for the last several days, right? Currently trending up. Let's come back over here. But volume is down. Volume's actually low. It's not even average. Okay, where's our momentum? Our momentum is up. Price, is it above the moving averages? Yes. Okay, it's pulling back currently. Actually looks like we're forming, see this, a contracting range right here. Okay, that could be a good sign, right? That could be a sign for a pop. Okay, so what would I potentially be looking for? Now, it's not something that I trade, but if it pulls back, okay, right, and it gets no lower than this right here, no lower than this, back around the 10, and then we get some trigger to the upside, okay, you would have a line drawn right down through there. If you took that out and started to go higher, okay, that would probably be a good long, but how do we know whether it would or wouldn't? Well, we have to see, we have to identify a target. Okay, do we have any? Maybe we don't. Maybe we don't, because it looks like where the price is, yeah. It might be at all-time highs. Who knows? I don't trade this very ever. I was going to say very often. I don't trade this name ever. All right, so maybe we don't have a target. So then, what do you do if you don't have targets? Well, if you're somebody who likes, Fibonacci's, you could do Fibonacci extensions and things like that. I'm not a big Fibonacci guy. I'm not a big Fib guy. Or you can use previous action, right? Previous action to kind of gauge where you might go. Okay, so look at this. We had a move up, impulse down, impulse up, impulse down. So as long as we don't make a lower low and we come back up this way and the other conditions fit into our criteria and we break out of this contracting range to the upside, this is how you would do this. Okay, it's very simple. And I think there is, you know what? I know there is. Give me 1 second. There is a tool on here for measuring. It's right over, which one is it? Is it this one? I just have to find it, guys. Again, just bear with me. This one? Is it this one? Yep, here it is. Okay. All right, so this move, and you're just looking for generalities. You don't have to be exact. All right, that move was about $1.06. Okay, that impulse. Get rid of this. Get it again. Okay, this one, let's see what this impulse was. It was around 87 cents. Okay, so maybe you add those together, $1.06 and 87 is 194, so basically say $2. I'm just making it really, really simple. Whoops, I meant to get rid of that. Sorry, guys. So just say $1. So if this comes down, bounces, and starts to go the other way, and you get a trigger from the bounce, from the low, you would then assume that you're going to get around $1 move, the next impulse, okay, around that. So what I would probably do is target about 80 cents for a take profit target. You see how I did that? All I did was I took this impulse move and this impulse move. I just added those two together, divided by 2. And typically, the longer a trend goes, typically, not always, the impulses will get slightly smaller each time until it runs out of momentum. Your bigger impulses are typically earlier in the move. Now, that's barring news or anything like that. So that's how you could do that. So if anybody was looking at this for a potential trade, those are the things I'm looking at. Breaking this contracting range right here, okay, to the upside. A bounce down here, which we came back to the 10, a bounce off of the 10, giving us some kind of trigger. Now it just went red again, giving us some sort of trigger, making sure these continue to widen, right? I only want to take it if price is above the 10, right? So let's say it pulls back, clear back to here, and then it starts to reverse. I'm only interested once price gets back above the 10. I want it to be completely above all three moving averages, EMAs. These are exponentials, 10, 20, and 30. Okay? Because that increases my probabilities of success. All right, one last look at ES, and then we'll wrap this up. Okay, so ES really, look at this, still tangled up right here in these moving averages. It's just not going anywhere yet. Okay, does that mean that we're going to go down? Does it mean that it's stalling and then it's going to go higher? We don't know yet, right? We could extend this across too, because this is the level of structure it hasn't been able to break through. You see that? We actually dipped up into it. Let me extend this. It'll make it easier for everybody to see. Okay. Let's bring this across. There we go. So you see how we dipped up into it and it rejected right there? And all our moving averages, okay, they were wide when price was dropping. Then it starts to narrow. Then they were starting to widen again. That's when price was dropping. That's why I like this strategy, especially for newer traders, for anybody. I like it. I like it. When you use these three equal moving averages, 10, 20, 30, mid-range, 20, 40, 60, longer term, 50, 100, 150. That's what we mean equal. Equal space in between all three of them. So this is the 10, 20, and 30. When you use this, it makes it so much easier to know what's going on. When they're starting to widen, see this? Boom, price is going to drop. It's going to drop. I mean, it is. Okay, then it pulls back. You see how it started, they were starting to converge again, but then as it starts to drop, what happens? They start to widen again, right? Start to widen again. Comes back, pulls back, drops again. Then we get up in here, and now we're kind of ranging. Now we're kind of ranging right through here. See this? Now we're kind of ranging. That's why I was saying before, I'm not really interested to the downside unless we get below here. I'm not really interested in the upside unless we get above here. That's just me. Okay, you might want to try to clip some things there, but you see how the moving averages have flattened out. They're coming together, right? That's a building of power. That's a building of energy. So at one point, they're going to break up or they're going to break down. So they either need to break above this level of structure or they need to get below this wick. Okay. Anybody have any questions before I get off of here? While I'm waiting to see if anybody has any questions, please don't forget to smash that like button. You know, give us some thumbs up, really help us out. Share us with other people. Share the channel on your social media. We really want to grow the YouTube channel. We want to grow the whole community. The goal is to make this the largest free trading community on the internet eventually, right? Because we give all this away for free. Okay, you come to our room, all the content is free, 100%, no strings attached. So definitely check us out at simpletradinglife.com. Click on the free chat room button, come join us there. Follow me on Twitter at freetradinghelp. That's my Twitter handle. Okay, got about 6,500 followers on there. And we're growing the room. Like I said, we're within a couple people of 400 in the community. We're closing in on 200 here on the YouTube channel. I'd love to see that get up around 1,000 as quick as possible. What I've been told was 100's the hardest, and then they claim that once you get over 1,000, if you're putting out good content, once you're over 1,000, it really can grow quickly. I know a guy who in about 6 months, now my YouTube I don't think has been going on 6 months yet, but this guy in 6 months he had like 30,000 subscribers, and that boggles my mind. But the first 100 and like 500 and 1,000 were like the toughest. And once he got over like 1,000, the thing just like exploded. He went from like 1,000 to 5,000, then he went from like 5 to 15, and then like 15 to 30, and just big jumps. So we'd love to get there, right? We want to help as many people as we can. All right, I don't see any questions coming in, so thank you guys so much. Have an awesome weekend. Come join us at simpletradinglife.com, and we'll see you in the room. Bye-bye.